Hey guys, Akil Stokes here. Welcome back to another Trading Edge video. If you're brand new to the channel, welcome. This is a video that I put out every week or close to every week, sharing with you some of the top trading opportunities that are on my radar for the week ahead. Now, very important, I mentioned this in the last video where we talked about that massive winner. This is not a signal service. That is not my purpose. My purpose is to show you examples of technical analysis and trading psychology for educational reasons, right? I am a trading coach. My job is to help you become better traders, and hopefully this video and the other content that I put out on this YouTube channel and across the other platforms with the podcast are able to do that for you. Now, we've been in a busy stretch of news. We spoke about this right previously. December, the month of December was going to be a busy one, right? We had a few interest rate decisions come out last week. We're following them up with even bigger ones this week. Maybe a little bit of American bias here, but bigger ones for me at least this week, right? We have the Fed, the FOMC, making an interest rate decision here in the US on Wednesday. We have Bank of Japan happening on Wednesday as well. And we have Bank of England on Thursday. And there's also sprinkles of other high impact news events, GDP, PMI coming out throughout the week. So keep an eye on your economic calendar and be aware. For you guys that are on the platform, I'll update you on a regular basis about what to watch out for, right? We saw that come in handy last week and help keep some of you away from those weird whipsaw type of moves that happen in the market. Now, we're going to look at a few different trading opportunities today. I have a few advanced pattern formations. You guys wanted more of those. I have a few more pure price action based trades as well, but let's kind of first talk about what's happening. So with these interest rate decisions, a few things are happening, right? Bank of Japan has switched from kind of the market assuming that we're going to see an interest rate hike to more of a no movement type of deal. So that's something that you need to keep in mind. With the dollar, yes, we're going to see an interest rate cut. That's pretty much a conclusion across the board. What's going to be important about the dollar is if they deliver any messaging about how they're going to proceed moving forward. My opinion is that they're going to consider kind of like a wait and see type of approach, especially with new leadership coming in January and new policy that comes with that new leadership. They're probably going to take the safe way and say, well, we'll see, blah, 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 and wait till future numbers come out and blah, 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 blah. That way they're not kind of stuck into any type of decision. If that does happen, we may see some positivity in the dollar. Again, we've been in this cycle of cutting rates, which should be weak for the US dollar, with a pause and a potential think and maybe even murmurs of a potential, whatever coming next. We may see some dollar strength resuming in the market, especially with other central banks across the globe cutting at a much more aggressive rate. So again, that's my opinion. We got a long time and we'll see what they say, but that's my thought process on it. But what we're going to do today is we're going to take a look at different opportunities on both sides of it. So an opportunity if we get a strong dollar and an opportunity if we get a weak dollar. So enough of me rambling. Let's hop in. So let's start here on the Aussie dollar. We're going to try to make this short and sweet and as simple as possible. This would be an example for if we do see dollar weakness in the market. We have another advanced pattern formation setting up, right? You guys love the video that I put on the cipher pattern and how great that worked out. This is going to be one called a Gartley pattern. And what you'll notice with these different advanced pattern formations, again, one, they tend to form in periods of consolidation. So that's why we've seen them so frequently over the last few weeks in the market, because the market hasn't been moving directionally. It's been kind of chopping back and forth, but they all start off the same way, right? They start off with an impulse or an anchor leg, which is a direct move. In this case, it's going to be a direct move from a swing high to a swing low right there. We then follow that direct move with a retracement. That's going to be this little guy up here. If I can get my things right. Boom, that's going to be our A to B, a failed extension to the downside, which is going to be our B to C. And in this case, if price action were to make its way up, I thought I had an long arrow thing here. I guess I don't. So we'll use a thick boy. If price action were to make its way up, this would give us the D leg, so the completion of our pattern. And how we know what pattern formation we're looking at all depends on the Fibonacci sequence, right? So I'm going to move this aside a little bit. What I want to do is I want to drag my Fibonacci retracement from my X leg, my starting point, to my A leg down here. right? Pretty close right there. And then based off what level that B retracement comes to, remember that's this first one right here, that's going to tell me what pattern to be on alert for. So in this case, it comes to a 618 Fibonacci retracement, which means it has to be a potential Gartley pattern, at least at this point. I don't know why I deleted the fibs. Sorry about that. My stomach is very hungry right now and my brain's not working too well. But I know this is a Gartley pattern. For the way that I trade Gartley patterns, I know I trade the completion at the 127 extension. So what I just did was I took my Fibonacci extension tool this time, right? Predicting where price may extend to. I dragged that from the low of our A leg down here to the top of our B leg up there. And it gave me this 127 Fibonacci extension right here. And I'll draw out a kill zone, a kill zone, get it? At the X leg or to the X leg right here. And this is going to be the completion area for my pattern formation. So in its entirety, this would look like this: X to A to B, B to C, C to D. And if price action were to get to this level, this would be a selling opportunity. Now with this next opportunity, we're going to be on the New Zealand dollar, and we're going to take a look at an example or a trading opportunity for if we see dollar strength. Again, this is where I think we're going to see dollar strength if I had to choose between one or the other. But I want to give you guys different opportunities so that you can attack it different ways. Now, in general, New Zealand dollar and Aussie dollar do exactly the same thing. It is big brother, it is little brother, one just follows the other. So we should see the same type of movement on both pairs. So this is going to be, again, where we're looking for a bearish opportunity on the first one. We're going to look for, well, either a bearish or a bullish opportunity here on the Kiwi, depending on how you want to play it. But for this one, I'm going to take a bigger look at things. I'm going to start off on the weekly time frame. And I'm going to go through that 4-step process that you guys love ever so much. It's called the IPDE process: identify, predict, decide, execute. This is something that my mentors taught me very early on in my trading career, and it has been really the staple of my trading. Why? Because it gives me a process to follow. It keeps me consistent in my analysis. And you know by now what I'm going to say: consistent analysis plus consistent execution equal consistent results. Meaning if you analyze the markets the same way, assuming you have a trading strategy that has an edge, and then you have the psychological ability to actually take the trades that you're supposed to take without self-sabotage and stay away from the ones that you're not supposed to take, you should have or be able to achieve the results that your numbers tell you that you should achieve. And that is a great business model. The problem is, many traders don't analyze the market consistently. They bounce from one strategy to another, one YouTube video to another YouTube video, one secret thing to another secret thing, and they always catch the drawdown for some reason, right? Isn't it funny how that happens? Whenever we bounce from strategy to strategy, we always catch it right at its losing moment, and then we blame it on the strategy when really it might be us. Speaking of us, psychology is another one. Some people have great systems, great strategies, but they just can't find it within them to take the trade. Again, go back and watch the video I put out on Friday, right? It's about that Euro Yen cipher pattern that we spoke about a long time ago. It's a technical video technically, but the message of the video was about how to keep yourself in the right mind state when a trade is trying to do everything in its power to kind of shake you out and have you lose confidence and make you make a mistake. So it's going to be a timeless lesson for any type of trader, no matter what type of trading strategy you're trading. So back to this point, IPDE, right? What I identify here in the weekly is a break and close below our previous level of structure, right? Look left, structure leaves clues. Based on me identifying that, it allows me to make the prediction that price is likely to go lower. The next question I want to ask myself is, Akil, if price action is likely to go lower, then where are we likely to go lower to? And there's a few ways we can make these predictions. The big generic way for simplicity purposes here on the video is look left, structure leaves clues. I like to look for the next level of structure, big zone looking like that, small zone looking like that. And that is my destination. Again, there are more clues we can put in there. We can use even-handled numbers, 56 evens down there. We can bring in Fibonacci's. We can use volume. We'll dig on that at a later moment and get more detailed. But bigger picture, what we're trying to ask ourselves is, one, what is our directional bias? Down. Two, if we go down, how far can we go down, or is there room to take advantage of it? And you see here, there is plenty of room. So now the next question that we need to ask ourselves, and this may vary depending on what type of trader you are, is how can we handle this situation? And there's really two ways to handle it. One, if you are a trend continuation trader, what this does is this allows you the opportunity to look for bearish trades down into this level. So you're going down to a lower time frame and saying, how can I get short? How can I perhaps catch a breakout? Or how can I hop on a pullback and trade it down? On the other hand, if you are a counter trend trader, a structure-based trader, this is your destination. You're saying, hey, I don't really care about trading it down here, but once it gets down here at these very important lows, right? Be careful of this little sneaky guy under here, right? Once it gets down here to these very important lows, how can I trade a little bit of relief, right? Similar to the advanced pattern formation. How can I trade a little bit of a relief back up? So again, no matter what type of, what side of the market you fall on, this is an opportunity for both parties. Going down to the lower time frame, the daily here, you can see again, we have confirmation of that lower low, lower close. We don't have any type of break yet because it was the end of the week and whatnot, but it'll be interesting to see if we can kind of continue that as the week starts off, or if we start that pullback. If we do start that pullback just initially, this is a very interesting area to look for right here, as it was a previous level of rejection on Thursday, and then also a previous level of rejection back here in late November. So keep an eye on New Zealand dollar, both for the bearish continuation trade to the downside, and eventually, right, we'll revisit this probably like in a month or so, a potential bullish counter trend trade, structure-based counter trend trade as well. Now, sticking to the price action theme, right? This was another opportunity that we spoke about a while ago on Euro Canada. If you guys remember this was a head and shoulders pattern. If you don't remember this, make sure you are a frequent follower, say that 5 times fast, right? Of the channel so that you don't miss these opportunities like this. But this was our head and shoulder pattern here. You can see it worked out pretty well. We've come to our first stopping point. If you recall, right, conservative Akil was saying, don't shoot for past here. It's scary. I don't know if price is going to do it. But the second level of aggressiveness, yeah, that's a word. Aggressiveness, right? Me in words, would be up here. So what I have beautifully drawn on you are not just brackets to show you levels of conservativeness and levels of aggressiveness. I'm doing that same dance in the background that I do in the podcast, by the way. I turned the camera off because my wife said I was embarrassing myself, but you can envision it and ingrain it into your head forever. If we can violate box 1, we should push to box 2. All right. Analysis over, right? But it's as simple as that, right? I am a simple trader, right? One of the reasons that people come out and be like, you're not getting enough traction on YouTube and you're not that popular, like I care about YouTube. I do care. Subscribe, please. I don't really care too much, but it's because I don't do anything super fancy and flashy and new, and that's not my trading style. I am methodical. I am boring, I am consistent, and I've made a really good career for myself over the last 18 years, consistently extracting profit from the market. Last 16 years, right? Those first 2 were a little, I gave a lot of money back, right? You got to go backwards to go forward sometimes if you don't go broke going backwards. But it's pretty simple, right? 2 boxes. One is a previous level of resistance. One is the next level of resistance. If price violates the first level of resistance, we should travel to the next level of resistance. Boom. Video over. No, video not over. I have one more pair to show you. It's going to be another simple one, right? We're going to follow up on the advanced pattern theme and share with you guys another cipher here. This time we're going to dollar Swiss. You can see notes already on my chart. Daily or 4 hour, either one of these is okay. Keep in mind, dollar Swiss, dollar interest rate decision coming out. So this is another one that you want to be cautious about. But this is an at-market pattern to start the week, right? I shared with you guys a cipher before, so I'm not going to measure it all out from the beginning. Again, trying to keep this video short because I'm extremely hungry. But swing high to swing low, X to A. First retracement right here is our A to B. Extension here is our B to C. And then our deep retracement that violates the B leg is going to be our CD completion. It's going to complete right around here, a little bit higher than that. And the zone is from this D leg to the high of the X. You can see we're traveling within that zone. So it is an at market bearish cipher here on the dollar Swiss as well. Hope you guys enjoyed the vid. Make sure you check out the Trading Coach podcast. I've been dropping new episodes each and every day, or at least 5 days a week. Some really good video episodes as well, as you guys tend to like that a lot more than just the audio version. So if you need some daily tips, need some back testing music or content, whatever you want to call it, check out the Trading Coach podcast. Some great ideas for aspiring traders, for struggling traders, for even veteran traders that just need to stay sharp. All right, until next time, plan your trade, trade your plan. Food time.
I wanna be the best in the game, invest in my name. Check no restraints, I'm obsessed with the pain. I ingest, I retain, assess and I change. Possessed by the thought I'll be free one day from society's restraints. Money, clout and fame, mud, disease, a plague. We all love to hate, have to play the game, have to make a name. All our insecurities are on display.